Good morning, sir. So my name is Yash Anand and I am from 5 BBA Honors B. My registration number is 212111776. So today I'll be talking about the salary. So we'll be knowing the process of the calculation of taxable salary of Mr. X for the assessment year 2023 and 2022. So first we'll look out the format. So the format is like this. So first particulars, we have a basic salary like bonus, fees, overtime, advance salary, commission, allowances, perks, employers contribution to provident fund, interest credited to provident fund, and after adding all these things we will know the gross salary. So after we have computed the gross salary, then we will have to deduct the deduction under section 16. So there are three deductions mainly: standard deduction, entertainment allowances, and employment or professional tax. So after deducting the deductions for the salary, we'll know the taxable salary of Mr. X. So first of all, I will be talking about allowances, which is very important. So which is the house rent allowances. So we'll know about the how to calculate the house rent allowance for Mr. X for the assessment year 2023 to 2024. So there are three things: if he is paying a rent in Delhi, Mumbai, Kolkata, or Chennai, or secondly, if he is paying a rent in other cities. So basically, the least of the following three will be allowed as exemption for the cities of he is paying a rent of Delhi, Mumbai, Kolkata, and Chennai. So first of all, if the question is there, so the amount is actually received. Secondly, 50% of the salary, and third, the rent paid minus 10% of the salary. So in the second, if he is paying a rent in the other cities, we'll deduct the least of the following as exemption. Firstly, amount actually received, 40% of the salary, and third, rent paid minus 10% of the salary. So we can see that the difference between the cities that we are paying a rent in Delhi, Mumbai, Kolkata, and Chennai, and for the other cities is only the second option is 50% of the salary, and here it is the 40% of the salary. So the question comes to our mind is, what is the salary here? Okay, so we'll be noting that the salary is equal to basic salary plus dearness allowance given in the question. So there should be a condition and the commission. There also should be a commission like the condition. So the condition will be of two types, like the commission will be given is variable or fixed. So if it will be a variable, then it is a condition and we'll add it. So I have explained it with an example. So here the question is, basic salary is 50,000 per month, dearness allowance is 5,000 per month, HRA is 6,000 per month, commission is 10,000 per annum, and calculate HRA for Mr. X paying a rent of rupees 10,000 in Noida. So we can see that first of all we have to see that whether it is for the cities like I have mentioned here, or it is for other cities. So we can see it is for Noida. It does not come under Delhi, Mumbai, Kolkata, and Chennai. Okay, so we'll be having looking for this list of the following part, which is the 40% of the salary. So working note for HRA, first of all we'll write the actual amount of HRA, which is 6,000. So you can look here 6,000. So I have written down 6,000. So ignore, first of all ignore these things. Okay, so least of the following will be allowed as exemption. So there it is written actual amount actual received. So in the question actual amount received was 6,000. So here is first of all 6,000. Second, 40% of the salary. So how I have calculated the salary? Okay, so if you will see, the basic salary is 50,000 per month, dearness allowance is 5,000 per month, and commission is 10,000 per month. Like I have written these three things we need, but there is commission is fixed and there is no condition given in dearness allowance. So simply we can understand that the salary is 50,000. Okay, so it's 40% of the 40% of the salary, which means 40,000 or 50%, which comes to 20,000. And the third part is rent paid minus 10% of the salary. So here rent paid minus 10% salary is 50,000. So we have to see whether which is the rent paid in the question. So the rent paid is 10,000. So okay, I have to write here 10,000. I forgot this. So 10,000 minus 10% of 50,000, which comes the answer for is 5,000. So we have to see the least, which is the least of the following. So 6,000, 20,000, or 5,000. So we can see that the 5,000 is the least. So 6,000 minus 5,000, which comes under 1,000, and for it's for 12 months, 1 year. Okay, for the assessment year of 1 year, so it is into 12, so 12,000. So simply we have computed the HRA is equals to 12,000. It is very simple. And the last I want to explain a very particular topic about the perks. Okay, so there are multiple perks, like there are multiple allowances. So I explained out only one HRA allowance, but there are multiple perks also. So we'll be talking about the value of rent free house. It is a perk under section 17. So first of all, there are three steps under it. First of all, we have to look into the question, and first we have to see like whether the rent free house is furnished or unfurnished. So note that if there is nothing written in the question, we always assume that the furniture, like the rent free house, is always unfurnished. Okay, if it is furnished, so in the answer we add 10% of the cost of the furniture. There must be a cost of furniture, right? So we add the 10% of the cost of furniture. So secondly, we check whether the ER is owner or not owner, or whether it is like lease for which ER is paid a rent. So if there is nothing written in the question, we always assume that it is for not owner. And thirdly, we check the city population. There are three criteria: up to 10 lakh population, up to like 10 to 25 lakh population, and more than 25 lakh population. And if there is nothing written in the question, we always assume that the population is more than 25 lakh. So for that we can see a table here. So it is written the population, and it is written the owner and not owner. And so if the population is up to 10 lakh and the employer is owner, we charge 7.5% of the salary. Okay, and if it is for 10 to 25 lakh and there is owner, so we charge 10% of the salary. And if it is the population of more than 25%, so and if there is the employer is the owner, we charge 15% of the salary. And if it's same like not owner, if the employer is not owner and the population is up to 10 lakh, so we assume that 15% of the salary or rent paid by the employer, whichever is less. Secondly, for the 10 and 25 lakh for the not owner purpose, we see the 10% of the salary, which is same for the owner itself. And thirdly, there is more than 25 lakh, we for the not owner, we assume that the 15% of the salary, we charge 15% of the salary. And again, we have to question that what is the salary. Okay, adding all the items except the following. So adding all the items, which means these items. Okay, these items are added, but there is a catch. The catch is we have to ignore the 17 perks, the perks which come under 17, like this thing: employer contribution to provident fund, interest credited to provident fund, and the dearness allowance. And the dearness allowance is only if the condition is given, then we can add it. Okay, so these three things are ignored and except everything is added, so the salary comes out. And that percent of the salary whichever comes under this criteria, we we took the percentage of that salary, and that answer becomes the value of rent free house. And the final thing, after computation of all these things, we get to the gross salary. And there are less deductions under section 13. There are three deductions. So the first deduction is standard deduction. So we compute the standard deduction of the gross salary if the gross salary, this part, gross salary or 50,000, whichever is less. Suppose the gross salary comes to 60,000. So and the standard deduction is 50,000 that is given. So the 50,000 standard deduction is obviously less. Okay, so we took the standard deduction at 50,000. And the entertainment allowance, so you can see that entertainment allowance is always allocated to the government employee only. Okay, so the least of the following three will be allowed as deduction under the entertainment allowance. So these thing is 20% of the basic salary. So the amount that it is 20%, and the amount actually received, what is given in the question in the except for the entertainment allowances. And the third is rupees 5,000. So whichever comes to the least part of the answer, so we write it in the entertainment allowance. And thirdly, it is for the employment and professional tax. So it is very interesting to know if the professional tax and the employment tax is paid to employer. So first we include it in the gross salary and then give it the deduction. So first we include it in the gross salary, and then we deduct it. Okay, so but if it is it is given for the professional tax and entertainment tax is given for the employee, not employer, that we do not write it above the gross salary, then we simply write it under the employment and professional tax. So we have to check whether it is paid to the employer or whether it is paid to the employee. So after computation of these three things, the deductions, we add these three things and write here, and we deduct it from the gross salary, and whichever comes the value is the taxable salary for Mr. X. So this was the simple process of how you can compute the taxable salary for Mr. X for the assessment year 23-24. So thank you, sir.